Well, strong numbers from Indigo Paints. Revenues have come in strong, margins have expanded, and we have Hemant Jalan, Chairman and Managing Director at the company, now joining in to take some questions. Mr. Jalan, good morning. Great to have you with us here on the program here at CNBC-TV18. Prashant this side. So, the first question is, what are you doing differently for you to be able to grow at 3 times what the industry is growing? Has there been a new product line, some campaign? Because you're far outpacing what the industry is growing at.
Well, Prashant, go back 2 years in time to the time of our IPO and look at the 10 years that preceded our IPO, and you'll find that we always outpace the industry growth by a factor of 2 or 3. It is only in the year after our IPO that our growth kind of tapered off and came back to the industry bandwidth of growth. Last year, a year ago, we announced a renewed strategy to focus on the larger cities as opposed to our erstwhile focus on the smaller towns. And, sometimes when you announce a new strategy, it does take a few quarters for the results to start manifesting themselves. And happy to see that we are getting our mojo back and returning to where we were of, not just 2x the industry growth, but maybe more than 3x the industry growth. Of course, we need to sustain it for a few quarters for the belief to come back in that we are going to consistently be doing that. But that's what we hope to do in the quarters ahead.
What about the current market share? What is it at right now? And how much do you plan to grow it by over the next, say, 1 to 2 years?
I don't think we look at the share prices.
The market share of the company, sorry. I meant market share of the company.
Oh, market share. Oh, okay. I thought you were referring to the share price. The market share is still very small. It is maybe around 2.5%. And therefore, the headroom to growth is huge. Obviously, we'd like to catch up with the big boys in the industry. In this industry, nothing is going to happen overnight. It is going to take time. And if we continue to outpace the industry growth, it would be a few years before we start emerging as a possible number 3 player in the paint industry. So we take it one step at a time and keep increasing our market share steadily. Nothing is going to happen with a big bang. And that's where we intend to be headed.
So from this 2.5%, as you said, right, there's a big scope to grow. Are you looking at what, 5% by the end of FY24, double-digit market share perhaps in the next 2 years? You must have outlined some sort of target for yourself. And do you plan to gain market share at the cost of perhaps margins? I mean, could that be a strategy for the next few years as you penetrate the market further?
Growing at the cost of margins has never been part of our strategy. And if you look at the results for the last 8-10 quarters or as far as back as you can go, our gross margins have always been the highest in the paint industry, even higher than the industry leader by a very wide margin. Our EBITDA margins are close to being the second best in the industry, and so also our PAT margins. So growth at the expense of profitability is never in our DNA, and I don't think we intend to pursue that course. As far as what market share we achieve at the end of what time frame, that's a little difficult to quantify. But yes, in a period of 2 to 2.5 years, if we can double our sales figure, which would mean growing at a compounded rate of slightly over 30%. That is what we aspire to do. How far we are able to achieve that or whether we exceed that, only time will tell. But the headroom to grow is so large that it would be silly to target anything less ambitious than that.
Okay, all right. Hi, good morning, Mr. Jalan. Just to understand that, in the next few years, the target is you double your revenues. Will you require to incur capex, or do you have already the capacities?
No, we had announced a large capex 2 years ago in Tamil Nadu. That project has come to an end. It is under trial production phase for the last 1.5, 2 months. We are just awaiting a few final clearances, which we hope will come through in another week or 10 days, after which we will declare commercial production. And that capacity should be good enough to see us for the next 2 years. But 2 years down the road, with the kind of growth that we are expecting, I think that we will again start facing a capacity bottleneck. So we have announced that we are starting work on a new 90,000 KL per annum water-based paint plant at Jodhpur, for which work has just commenced. And we hope that that would go on stream in about 21 to 24 months from now. And that should take care of our capacity for the next few years.
Mr. Jalan, for this year, that's in the near term, FY24, what kind of a revenue growth are you penciling in? And also margins, what should be the rough range from around the 17% odd for the near term?
I don't like to give a specific number guidance, but I think we'd be happy if we ended the year at, a 30% plus top line growth. I think as far as EBITDA margins are concerned, we'd be happy in a 19 to 21% bandwidth. That is what we strive to attain. And if that happens, then the PAT margins would obviously be somewhere in the range of about 13%. But I would shy away from giving very specific number guidances because they're somewhat dependent on the fluctuations in the raw material prices. At the moment, they are a little benign and they have been soft for the last few quarters. But that is something that is completely unpredictable. And should the raw material prices turn around and start going up, that could have a slight short-term effect on profitability.
You know, we have a bunch of other questions, especially competition, right? But we'll leave it for another time. We're out of time. So thank you very much for beautifully explaining the strategy and, what you aim to do at Indigo Paints. Congratulations on a very healthy set of numbers. We've got, 2% in the stock, 1626. Well, the market is not doing very much, so it's down 8 points or so, and things are on the flat side. Market